Hi everyone, it's Howard the Condo Man, and today I am going to talk about buying in your corporate name versus buying in your personal name. What are the benefits? What are the pros and cons? So I have done both personally, and I have recommended to clients to do both as well. You should talk to your accountant and you should talk to your lawyer, but what I will tell you is that each entity can't see every single side of this. So there are accounting sides to buying in both, which I'll explain. But then there's really a financing side that the accountant can't see. And then there's a legal side. The legal side is actually less important in this case. Let me go through the pros and cons of each. So, buying in your personal name. When should you buy in your personal name? The number one tax loophole in Canada is that you don't pay capital gains tax on your primary residence. It's not so in the States, at least not in every state, is my understanding. Um, if you put something in your corporate name, you are going to have to pay capital gains tax. There is no way around that. So your primary residence, when you sell it, let's say it appreciates $500,000. If you bought it in your personal name, sold it in your personal name, you are not paying capital gains tax. If you bought it in your company name, sold it in your company name, you will pay your capital gains tax on $500,000, which is about $125,000. So that is first and foremost. Second of all, it is much easier to finance things in your personal name. There are very, very few mortgage companies that will finance things corporately, and it is more complex than you would think. From what I know, Meridian is financing holdcos, which is my next point is how do you finance things in your corporation? And when should you? So when does it make most sense? When you're buying an investment property or another investment property or a third investment property, you already have a primary residence and you're already benefiting from the capital gains tax exemption on your primary residence. At that point, there is no other benefit to buying a condo or a house in your personal name, and it might make sense to buy it in a corporate name. Now, if you are not self-employed, then this won't make any sense. Really, it only makes sense to buy your investment properties as in your corporate entity if you are self-employed. So what happens? Let's say that you are a self-employed doctor. You are going to earn money into that what's called operating company. So you make $500,000 a year seeing patients. It's a very good year. You are going to pay corporate tax on that money. The corporate tax rate is much lower than the personal rate. It is about 13%. Really, it's between, let's just say it's 13%. It depends on how much you make. Once you go over $500,000, the tax rate gets higher. So if you want to use that corporate money, which is taxed at a much lower rate than personal, let's say the personal tax rate is 47% for the sake of this video, what you should do if you want to get a mortgage, so if you want to be able to get financing with that money, is start a holdco. What a holdco is, it's a company that doesn't generate any revenue other than investment revenue. And that holdco, again, it's still difficult to finance by a major bank. However, there are some major banks that allow you to finance real estate purchases in that holdco, and then you can use after corporate tax money, which means you're paying the lower tax rate than you would personally, and you're now investing. Let's pretend you're not taking any personal money from that $500,000 as a doctor. That means that you could have $370,000 to invest after tax rather than only having $250,000 after personal tax. So in a way, you can buy a lot more with your after-tax money. And that would be the biggest reason to buy things in a holdco. One other downside to having a holdco, you have to file tax in another company every single year. So, when does it make sense to buy real estate corporately? It makes sense when you're already self-employed, when you already have a primary residence, and when there's enough income going into that operating company that you can afford to invest in real estate. At that point, it's starting to make a lot of sense because you're going to pay after corporate tax. You're going to use after corporate tax dollars rather than after personal tax dollars, which means that you have about 20% more money to invest in a different way of explaining. Okay, so again, negatives, you have to file taxes in another company. Any other negatives? You're going to have to chase down your mortgage a little bit more, but it can be done. And I would recommend starting to do it if you do have a company making a lot of money. You will be able to save on tax. Something people are always confused about, when you sell, the tax rate is about the same whether you sell an investment property, not your personal property, like not your primary residence, an investment property that you own personally, or an investment property that you own corporately. When you sell, you're still paying capital gains tax. The only difference is when you buy, so at acquisition, you're using money that's taxed at a lower rate. So that's the reason to buy real estate corporately. That's why you get a holdco. I think that's enough today. If you have any questions about that, feel free to contact me by email, howard@howardthecondoman.com, or text me at 647-892-6636 to schedule a call. I'm happy to put all the pieces together for you and get things going in this light. Have a great afternoon, everyone.